Good afternoon, everyone. Thank you for joining us. We'll give everyone a couple minutes as they're still entering. So we'll get started about 12:40. We'll give others a chance to join the webinar. Good afternoon for those that are joining us. We're just going to give everyone about 3 minutes to continue to join. We're going to start at 12:40, but for those who have been here in advance, we just want to thank you. Good afternoon, everyone, and thanks for joining. We are ready to start. We were giving people a few minutes to be able to join us, but my name is Colina Outerbridge, and I am the Business Data and Policy Analyst at BEDC. Today, I will be co-hosting Accounting the Basics webinar, along with my colleague, Ondreyah Rochester, who is the MSME Junior Officer. The reason we are hosting this seminar is because we realize that there are a lot of businesses that have trouble keeping up with their accounts. As we know that most entrepreneurs and small businesses wear many hats, but also knowing when you need the help, when you need to get help. So when you think of accounting, what comes to mind? Hopefully things such as customers and vendors, invoicing and record keeping, running financial statements, preparing budgets and cash flow projections. Some, if not all of these things should come to mind to assist you in making better business decisions. But I don't want to divulge too much information as we have some expert excellent expert professional panelists, as well as successful business owners who are going to expand more on the subject. But just as a reference, we as hosts are business owners as well and can shed some light on the topic. So the agenda for today is going to be the introduction of the panelists, the discussion around the topic, a period for a questions and answer, and then a closing with some resources. So today we have 4 panelists. We have one that's going to join us a little later, and that is Carlos Francis from YoCherry. We also have, and that's a business owner. We also have business owner Raquel from Blueprint Hair Studio. We have Ray Jones who is a professional accountant, and they'll all give you their background. And we also have Keitha Caines, who is an accountant. So without further ado, I will allow them to introduce themselves and give a bit of background information about their business and where they come from.
Okay, you can go first.
Okay, good afternoon, everybody. So my name is Raquel Brown. I own Blueprint Hair Studio. It's been in business for 7 years now. I currently employ 10 ladies. I started out as a 3-man band, and now I've grown into a medium-sized business, which is awesome. And yeah, I think that's it.
Okay, Keitha.
My name is Keitha Caines. I am an accountant. Colina did mention that we're also business owners, so I'm a partner in Bermuda Communications Group, which I also manage the accounts for that business, and do voluntary treasury work for churches or other organizations that are nonprofit. And I'm a CPA. I've been working in accounting since high school. All my jobs have been in accounting. So yeah, that's a bit about me.
Ray.
Good afternoon, everyone. My name is Ray Jones. I'm the current director of the Economic Development Department, the former finance director at BEDC. I don't know why Keitha left that significant part out of her introduction. It's a pleasure to be back here. It's a pleasure to be back here speaking to the clientele. I do miss the BEDC family and the clientele. I'm a business owner as well. I do some consulting. I also was a former retail business owner. I won't divulge what that business is. It might distract us today if I actually tell you what it is. And some of you just might know the face from football, as I'm heavily involved in football as well. So that's me for now. And I turn it back over to the host.
Thank you, guys. And I'll actually allow Ondreyah to introduce herself as well. I know I gave a little bit of background in the BEDC, but I'll allow her to introduce herself.
Hey, you put me on the spot. My name is Ondreyah Rochester. I am the Junior Micro, Small, Medium Enterprise Officer, which in short means that I meet with clients. I am also the officer for the Somerset Economic Empowerment Zone. I do everything. I'm the project manager for the Bermuda Business Awards, and I love working with the children at BEDC. So that's kind of me in a nutshell, as well as I am a business owner of a few businesses.
So do you want to expand on this business? Or?
Okay, so I have a business that I co-own that's currently not in operation due to COVID, which is Stamps Bermuda, which is a travel company. I am also the co-owner of Farm to Table, which is a luxury dining experience. And I am the sole owner of 1111, which is a shoe company.
Okay, and I gave a bit of background information about my BEDC job with BEDC, but I am also the owner of Quantified Consultant Services, and I provide financial accounting and business bookkeeping services for mostly small to medium-sized business. So like I said, we all have a bit of business background, and so we'll get into some more information about that as we get into our talks. So without further delay, we do have some questions that we had given the panelists in advance, just to get some feedback on how we feel about how important accounting is in general in businesses. And so we're just going to go through those. If you have any questions that you would like answered, you can drop them in the chat, and we will be monitoring those so that after we're finished, we'll be able to get to them as well. So my first question is, and I'll pose it to one of you and then everyone could jump in afterwards. So I'll pose this to Ray, since he's the only guy so far. Why is accounting important in a business?
Well, for me, and I look at small businesses or at businesses at any size, accounting provides the roadmap to how your business will be successful. It allows you to report on how you're doing today, also forecast your vision or how you see your company in the future. And it allows you to do a comparison to actually see if you're on track. Without it, I would say for the most part, running your business would be a mystery. And then the myth is because there's money in your account, you think you're doing well. So for me, I sum it up as the roadmap to success for your business.
Okay, great. How about you, Keitha? What's your thoughts on why is accounting important?
I would say because you're able to know your business's financial health. Pretty much what Ray said, right? It's a mystery if you don't keep track of it. So you're not sure how your business is doing. If you're able to manage your debts, like with the cash flow part, it keeps you organized. It also holds you accountable. So when you're spending and receiving money, that you're not, overspending more than you actually receive in profits or revenue. If you're looking to later on do loans, again, investments, all that information is important. So it's good to keep track of it so that you are able to kind of look at any given time and see how your business is doing.
And Raquel, from you going from a 3-man band to now 10, how do you find accounting has been important in your business?
Accounting is super, super, super important. And I just want to speak on this on my behalf. When it came to my business, I had a huge issue maybe 2 or 3 years into my business where I was doing the accounting on my own. My dad was helping me. He is an accountant by job. And my computer crashed at the salon. We had like an outage. The computer crashed, and I didn't realize that my accounting wasn't saved in the cloud. So what happened was I pretty much lost all my information from my business from when I opened, and I had to then try to write it back up. And at that point, that's when I ended up hiring an accountant. So now I have an accountant full-time. I cannot live without an accountant. They hold me accountable. They definitely, monthly, they're like Raquel, XYZ, and it's very, 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 very important because it could be very detrimental to your business. Like they said earlier, when it comes to loans, any kind of finance help, if you're in debt, whatever, at least you can see that at the forefront and you can make decisions, good business decisions going forward. So that is definitely important to have an accountant, or be an accountant for that matter.
Ondreyah, do you have anything you want to add?
Not really.
Not really. Okay, so one of the things that I as soon as Ray said it, what they say, the hairs on my back stood up, because there's a lot of times that when businesses can pay their bills or they got money in their account, they think, oh, I'm doing good. I don't need, to do accounting. I don't need to keep up with that stuff. If they think, I've got money in the bank or I can pay my payables, I'm fine. And I tell them all the time, if you don't keep a track and know, like Keitha said, what's coming in to what's going out, how are you able to tell? You could be making a loss every month if you actually put that information in the system. You could be making a loss every month, but you wouldn't know because you're not keeping that information. So it's definitely important to keep some type of accounting records, or just keeping that in general. Ondreyah?
And also, I forgot to state that we're just going to be giving away like random prizes throughout this session today, and we will announce the winners at the end. So that means you have to stay to the end to know if you're a winner or not. But the next question is, why is it so important to separate your business from your personal account? So I can answer this because it's very important to have a business account. Most people try to go around the process because it is a very, very, very lengthy process to open up a business bank account in Bermuda, but it's necessary because when you have those funds combined with your own personal funds, you don't know the separation between what is actually your business revenue versus what is your personal revenue. And I came into the mistake of using my personal account, but when you want to see a business succeed, you're just using all the money. So by the time you look, you're dipped into your personal account because you want to see your business succeed. So it's important to separate the two so you can know exactly what it is that your business is doing and keep your personal funds for just that reason, for personal reasons. But I will give this question to Raquel first.
Okay, so yeah, very, very important. I keep my accounts completely separate from the moment I started my business. I went through the tedious process of, you know, going through the bank, opening up bank accounts, you know, getting a loan and, you know, all of that jazz. But like you say, like when you see loads of money in an account, you think that everything is gravy, you think everything is cool, you know, and oh, I'm making so much money, but you definitely have to keep them separate. Like I pay myself, like I pay all my employees. I keep my, it's a straight knife cut. It's not anything complicated. I treat myself as an employee. It's very, very important that as a business owner, you pay yourself according to what you would pay somebody else for the same job you're doing, right? So if you feel like you're an accountant, or if you feel I'm a hairstylist, I pay myself exactly the same as I pay all the rest of my stylists that are on my level, you know what I mean? So yeah, that's my little intro on it.
Keitha?
Yeah, I would agree. It's just helpful so that you don't blur the lines. And then you're able to establish your business value. You can say, this is the value of my business based on knowing what's your business versus personal. And you can start to build business credit, right? With the banks and everything else for future investments or future purchases, you'll start to build the credit. And it's easier for record keeping. Like Ondreyah mentioned, like having to go through and split it out, it's time consuming, right? And if you keep it separate from the beginning, then you have a clear picture from beginning to the end what your business looks like and what the value of it is.
Ray?
Yeah, for me, I want people to view it, small business owners to view it slightly different. People think, well, it's my business, it's my money, so what's the big deal? Then essentially, it's not your money, it's your business's money. And technically, by co-mingling, you actually are stealing from your company. So when people ever on this call take a step back, would you accept one of your employees stealing from your company? I'm sure most of you will say no. So essentially, when you co-mingle, and I think Ondreyah mentioned it, you know, you just spend because you see, technically, you could end up stealing from your company, which could then lead to failure. So I just want to come from a different angle, because it's very, 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 very important that you separate the two. I think Raquel was spot on. Set yourself a salary. That salary has to be built into your whole business operations. So that's important. In reference to opening the bank account, yes, it's become definitely more difficult to open a bank account in Bermuda. But some of the suggestions I've made to people is, if you have more than one bank account, while you're opening up the business account, clear out the other personal account and use that as the business account, just so you can track, and then transfer those funds over once you get your business account open. So those are my suggestions, but I will definitely say co-mingling personal with business is a big no, 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 and it's a road for disaster. So that's my viewpoint on the personal and the business account.
Yeah, I just want to piggyback what Ray said, because that was something that popped into my head is while you're waiting, even if you open up a savings account and then you transfer it over, as long as you have some type of separation where you're not using that same account for the two. Because I have had plenty clients, and if you're doing it yourself, you're not the only one. These are just tips that you can take away and things to help you going forward. But I've had plenty of clients, and speaking to what Raquel said, oh, I don't pay myself. But then they use that account to do all their personal stuff. And it's like, if you're doing record keeping, instead of me having to record keep one transaction, which is a salary payment, I now have to do 10 transactions because you've used that money to do personal stuff. And how am I recording it? Versus if you just paid yourself a salary, it's so much easier than having, my time is going to be a lot more doing these 100 transactions when I only need to do 5, which is a payment to salary. So it just makes it a lot easier if people are paying yourself and then using that money however you like. But because it's in your business, you have to reconcile that bank account. You have to reconcile that statement. So the entries have to go in, but it's not a business expense. So it's just like Keitha said, that blurred line, just making sure that you're keeping it separate from the beginning. And it's going to be very important in just going forward.
So just to piggyback off of what Colina said, when people say like they don't pay themselves, sometimes when I'm reviewing, like sometimes my friends ask me to like review the statements and stuff, and I'll be like, you said you don't pay yourself, but then I see you went to a restaurant or you went got gas, and you're just like, oh, well, I'll just get gas off of my business. That's still technically paying yourself. So you might as well have just took a little $500 and went for dinner, got your gas, went party, whatever it is. But you can't say you don't pay yourself. You take it in little increments, but it still adds up to just giving yourself a salary.
And I feel also doing it that way, you have some type of control how much you're actually spending. So like these guys are saying, when you see the money there, you're just like, oh, I can spend it, or it's my money, or whatever the case is. But if you're actually paying yourself a set amount, then you can keep control of what you're actually taking out and what's being left in the business. Because at the end of the day, this is your business account. So the next question I'm going to ask, and most of you should have heard of at least one or more of these terminologies. Accounting terms that small businesses should be familiar with: assets, equity, liabilities, inventory, cost of goods sold, accounts receivable, accounts payable, revenue, and expenses. So I just want to get, I guess maybe Ray and Keitha can speak more on the accounts payable and receivable part, or just go into a little bit of details. I guess you can split on what terms, want to speak about the terms and what they mean.
Ray, you want to go first, or you mean you first?
One to take the balance sheet, I want to take the P&L.
I just want to, I'll take a stab at this. Basically, I know most people will say, well, I didn't go to business school, so I don't know accounting and the accounting terms. I don't want to date myself, but I can let you know you can no longer go to the bank or an investor seeking finance and you don't know the basic balance sheet and income statement components. The person on the hook is not your accountant. It's actually yourself. So as much as Raquel said, you get your accounting to assist you, keep you on track. You have to have an understanding of the financial statements that they produce on your behalf. Not to say that you have to know what every debit and credit is to be able to put in the system, but at the end of the day, the financial statements is a roadmap as to how successful or how unsuccessful you are. So there's what I would call is 3 key statements. The balance sheet, which basically highlights what your company's worth. the income statement, which basically speaks to the revenue and the expenses flowing through the company during the year, and the cash flow statement, which is kind of key to any business, because cash is key. If you don't have cash, you basically can't pay your bills, you can't forecast going forward. So for me, the balance sheet, some key components is the assets, which can be split between current and long-term. Current will be any asset that can be turned or liquidated into cash within a 12-month period. Long-term is items that will not liquidate within 12 months. Examples are the best current asset you can have is cash. I'm going to keep ramming that home because I think later on we're going to have another question about getting paid. But cash is probably the best asset you can have. Another form of what we'll call current assets is accounts receivable, and that's what people owe you. I'm going to defer that for later on in the conversation because I have my thoughts about accounts receivable. And then long-term assets are things like if you own a building or vehicle or anything like that. So that's kind of the classifications on the asset side of the balance sheet. And on the what I would say the liability and equity side, you have similar components, which is current liabilities, long-term liabilities. Your current liabilities are basically expenses that you will pay within the 12-month period. Long-term liabilities could be like financing any type of loan that you might have. And then the equity section of the balance sheet basically highlights the net worth of your company. So real high level, normally we would take, BEDC as a class and we spend a bit more time than 5 minutes. But those components of the balance sheet are very important to you as the business owner. So you have to get an understanding that makes you comfortable so that when your accountant produces the statements for you, you can read them. I'm gonna leave the P&L to Keitha, but I will share something with you, which I used to say in the class that we taught at BEDC. It's called the balance sheet because it must balance. So if the accountant gives you a balance sheet that does not balance, you need to fire him because he should not be passing on a balance sheet to you that does not balance. So basically, so you have an understanding, the assets must add up to the same amount as the liabilities and the equity. If they don't, then you have a problem with your balance sheet. So I will now turn over the income statement / P&L to Keitha to say, I guess, give a few words.
And P&L, he means profit and loss. It's short, the accountant say P&L. So really, like I could say, it speaks to your profits and your loss. That's the bottom line. Are you making a profit or are you making a loss? But the revenues they're used to describe what you've earned. Whether it's a service industry, so like Raquel, she would have services that she provides. Raquel would also have products that she's selling, so she'll receive revenue from products and services. So it's a reflection of those things that you primarily sell for your business that keeps it operational. And then the expenses are going to be any expenses incurred in just producing the product and providing the services, so hiring staff, paying benefits, utility, rent, all the expenses that are associated with just operating the business. And cost of goods sold is also on her. Cost of goods sold is the actual cost that it takes to produce the items you're selling or the services you're providing. So in that instance, if you're producing toys or dolls, it could actually incorporate the different items that go into making the doll. The cost, if you're buying it and reselling it, the cost to actually buy the doll and landing costs or the shipping costs, all those things get factored into the cost of goods sold. So whatever you pay to actually provide that service, to provide that product, that will become your cost of your goods sold. And I think that's it. It's obviously going to be a lot of different line items for your revenue and for your expense based on what type of business you have. But just overall, these are just the expenses that's required to operate your business, and revenue is anything that you've earned in the operation of your business. And revenues less expenses will create your net profit or your net loss. So the goal is that your revenues are going to be revenues less your cost of goods sold is going to create a profit, right? It's going to be more than your expenses.
Well, that's definitely the hope. That's the goal. It's obviously
the goal is to have a profit. I mean, and obviously in the beginning when you start businesses, you might not have that initially. It might take you a little bit of time to kind of get into that swing, but that is the long-term goal, is to be earning a profit.
Okay, great. Before we get into Raquel, just to touch base on one of the other items that we did mention, I don't know if Ray went into it, but inventory. Inventory is another asset. And so basically that's something that you want to record, because if you are, like you said, in retail business and you purchase items for your business, you want to be able to show that somewhere on your books, because those are assets to the business. If you're able to turn those items into cash once you sell them, they are a profit or they are a value for the business. So that's something that you do include on your balance sheet as a current asset, because it's an asset to the business. And then also just to touch base on the cost of goods sold, on a P&L or profit and loss statement, it usually comes under the revenue, and so you're taking your cost of goods sold away from your revenue. And the reason that they do that is to show what the profit you made outside of what it actually costs to make the product. So you're getting your revenue, and then what is that cost associated? So this is how much I actually made once the items that you purchased with it are taken out. So that's a way of being able to show the gross profit of what you made from off of selling something or your services. So Raquel, obviously you're not an accountant, but we do want to just figure, what's your knowledge of those terms and how do you feel about it?
I was just gonna jump in. So inventory is actually something I struggle with a lot, because in my business and what it looks like for me, there's a lot of different moving parts when it comes to the servicing and the retail sales. I also own a distributorship business inside my salon. So I sell to salons. I also sell to clients. We also use products in the salon. So all the cost of goods sold, it factors into everything, right? Because Blueprint uses color, we use shampoo, we use conditioner. These are all items that I'm buying. I could sell them at full price, but I'm buying them to use them. So that sort of needs to be calculated differently than retail sold to clients, or the discounted rate that salons get for purchasing things from me. So that is actually an area where it's a fight, because I go through my financial statements every month and it's like, oh my God, why aren't these numbers adding up? And it could just be, a stylist goes to the back and picks up a box of color and doesn't tell Dre at the front that she took it, and it's just like that. The numbers go off. Somebody picks a bottle of shampoo and they're using it. They don't say that they took it. And then the numbers it's an ongoing thing. So I respect Gibbons Company, all those companies that have all sorts of products, and you're tracking people touching them, moving them around, and it's a hard, people stealing them, it's a very, very hard business, retail. I must say it's very, very difficult to track. So I guess for the people listening in, if you are going down this avenue or opening up a retail business or anything along those lines, to keep in mind that if even if it's a bakery or whatever, you have to down it to the sugar, how much the sugar costs, how much the flour costs, how much does every single ingredient that goes into making one cake, how much that costs you per cake, per icing, whatever it looks like, because it's a huge problem. And I know, like, you may get the money coming in, it's like, oh my God, I just made $200 on this cake, but how much was the cake actually worth, including your time, including the amount of time it takes you to do it. So I just want everyone to, I guess, think about that when it comes to, you know, inventory.
And I'm glad you mentioned that, because we are going to talk about it a little later, but a lot of people don't value their time, or they don't think about, you know, what my time costs to somebody else, and including that in their pricing. So we are going to talk about that in the next couple of questions. I'm glad you brought that up so that it gives people something to think about. Okay.
I just wanted to highlight, because we didn't give them, just so the audience would know, things that will be considered expense. Everybody on the call, it might be obvious too, but just for the audience. Rent, electricity, telephone, those are things that are expense items. So I just wanted to share that with the audience, just so they can have an idea. If they're just starting out, they might not know exactly what an expense is. I think we're pretty good on the revenue side, so I just wanted to share that so that they could be aware of what this expense items potentially look like.
So I think when we finish the call that we should send these terms around so that the listeners can familiarize themselves with what they actually mean, like do some research to find out what exactly it means, because like Ray said, it's one thing to have an accountant, and Raquel, you do extremely well, because obviously you're really good for your stuff, but it's one thing to have an accountant, but if you can't read it, what sense does it make? So these terms is not going to turn you into an accountant, but it will help you understand exactly what you're reading. For me, the cash flow is probably, for me, at this moment and stage in my business, the most important thing to me, so that I can track. And like Keitha said, you may have different revenue streams, and it's important that in your cash flow, you outline that. So Raquel, you're her, and your products, because your products would be doing terrible, but because you're not separating the two, you're not able to see that, you know what, and sometimes it's not really that they're doing terrible, sometimes your pricing could just be off a little bit, and that's what's harming your cash flow, but it's important that you keep track. At minimum, I just say cash flow because that's probably the easiest thing for you to do for yourself, is to keep your cash flow up to date. And then Ray said something, and I found a quote this morning that piggybacked off of it, that says, life is accounting, everything must balance. So yeah. So the next question is,
Actually, before we go into the next question, a couple things that you guys have said have been very important. So with regards to sending everyone something afterwards, I just made a note that we can do up a cheat sheet. So everything that we've discussed, we can kind of break it down a little bit, as well as the terms, and so that you guys have a kind of like an FAQ or something like that, like a sheet that you can go to just as a reference from what was discussed. This presentation is being recorded, so you can listen to it later on, but it'd be good to have something as a reference. And then going back to what Ray said earlier about the bank, the banks don't want your accountant to come in with you when you're looking for your loan. They want you to come in. So if you're, like he said before, I think back in the day, you probably was able to take your accountant with you when you're looking for a loan, and so they can speak to your financials, but the banks no longer want the accountant. They want you to be able to speak to it. So you don't necessarily need to know every detail, but you have to understand at least somewhat of what that information is stating, so that you can be able to present that information to them. So, and just for your own knowledge, regardless of what an accountant or a bookkeeper or what someone else is doing, you should at least have the basic understanding of what's going on. So that's going to be very important. And then the last thing I wanted to mention, what piggyback off of Ondreyah, I tell my clients all the time, if you have one revenue stream, you put that. But when you have your cash flow projection, we have an actual, and I can send that as well. We have a cash flow projection that we have used at BEDC, and it's an Excel spreadsheet, and you can increase and add more lines and show those different streams. So like in the course that we teach, if you have a retail business and you sell accessories and you sell shoes and you sell shirts, you want to be able to show them all differently, because like Ondreyah said, one of those items could be doing badly, and then how would you know? And so you may say, okay, well, we're not making as much money as we could. Maybe we need to advertise more, or maybe we need to cut it out altogether. And then the other products may be doing fine, so maybe you don't need to do as much of them, and you can spend that time or money somewhere else. So it's definitely good to be able to break that out so that you can see how each product or service is that you're providing.
Okay. So the next question is the importance of sending invoices timely. This is a problem for most, like 60% of people. I have a problem with getting a service or a product, because obviously if I approach you at that time, that means that I have the money to pay for it at that time. But I find in Bermuda, it's like, oh, well, I know Colina, so I'll just send her invoice next week. Well, who told you Colina wants to pay it next week or has the money to pay it next week? She has the money now. So I don't understand why it takes so long to send out an invoice for a product or service that you're providing. Like, the mentality of, oh, I know them, they're gonna give me the money, it's cool, I'll send that when I feel like it. Like, it's very much important for you to, you can't go to Marketplace and walk up with your groceries and go back next week and pay them, right? So why in your business would you allow someone to walk off with your product or service and pay you at a later date? So I think it's very important that as soon as a product is given or service is rendered, that it's invoiced and paid for at that time, unless your business has a different payment schedule. But for the most part, you want to receive your funds when you deliver your product or service. So I will give this question to Raquel first.
Okay, yes. So I run a salon, so it's first nature. You walk in, you ain't walking out the door without paying. That's how it works. But I do off-site bridal hair. That's what I specialize in. So that's sometimes a little bit tricky because I do a lot of overseas brides, which they may do wire transfers or pay deposits half before, half after. So it is a little bit different sometimes, but for the most part, we definitely take the money up front for any kind of service, even if it's a service that's supposed to be given in a period of time, maybe next year. They always still pay a deposit to secure the date so that people's not last minutely like, oh, I'm not gonna come now, or oh, we're not, coming to Bermuda or whatever. Yeah.
Keitha?
Sorry. Yeah, Raquel's got the right idea though. It's always better to not have to do accounts receivables, but sometimes in business you can't avoid that, right? So sending invoices timely is very important, because if people are expecting, for instance, if someone's expecting that the invoices are going to come on the 1st of the month or the 15th of the month, they're probably looking out for it because they're probably sitting there and getting all the payments out the way at one time. If it starts to come later or different times, then they're kind of not really in that mood. They're not ready for it, right? It kind of gets overlooked or missed in their emails. And again, they're expecting that they're going to receive it this time. They can sit there, go log into the bank and pay all the bills or write all the checks, however they do it. And to keep that in mind, because when holidays are coming around as well, right? Sometimes it might throw the dates off, but still to consistently send it out at the same time so that you can, build a rapport. They're expecting it. They know you guys are serious, you're professional about your money. It also would help improve your cash flow. The sooner you send it, like I said, the people are ready to pay their own time, and so you're able to get your money. Sometimes they might even pay as soon as you send it, right? Because they're expecting and they're waiting on it. So it's definitely important to send it out, because if you don't, to be honest, they might forget to even pay it. If it's not set up recurring, there's nothing to jog their memory or to be like, hey, let me pay this. They're gonna forget. And then when you remember, it's now 3 weeks later, and you're still gonna have to wait to get that cash into the bank. So if you would have sent it out on time, then you would have had it, right? So I would definitely say it's important to bill people on time. It's even better if you can do retainers or do something else where you get money up front anyway. So, but yeah.
How about you, Ray?
No, I would agree with everything that's being said. Really receiving the cash at the time of service, if there's a future service, taking a deposit. People are afraid to take deposits. So they think they might lose the business. What I've told people in that case, then that's not a customer you want, because not every customer is your customer. And if that's serious, they have no issue with paying the deposit to secure your services. And really, cash is king. So really, if you could eliminate accounts receivable, try to. There might be instances, and the example could be if there is a large client that has a large volume of transactions with you, then it might make sense to just bill them at the end of the month in a timely manner, as Keitha highlighted, because then it's easier for them to create a batch payment back to you. But otherwise than that, I would really encourage payment at the time of service being executed or the product being actually sold.
Thanks, Ray, for that, and thanks, you guys, because I can tell you, we definitely see people that send invoices and they're dated February and we're in August, and we're like, why you didn't bill us that all this time? So we definitely can see that being a big problem, especially for businesses as far as cash flow. So the next question we have, and we talked about it a little bit before, obviously I think this is going to be high level, so we don't have to go into too much depth, but just an overview about how to set prices. Ray, want to talk about that?
Sure. I think the key part is understanding, in order to set the price, you actually need to know all your costs associated with your service or product. You cannot just do what I would call a market research survey with people that are doing similar services and basically say, my price is going to be $5 less, so here's my price. The cost of running your business could be different from the cost of the person that you did the comparison to. I think Raquel and Keitha and Colina and everybody had highlighted things to consider. If it's product, you have to consider first cost from the manufacturer, delivery costs. I like to use the example in the retail space. You know, people plan them shopping trips, and because part of it is they do a little vacation, they tend to not account for that cost, but the actual cost of the trip came out of the business account. So all of that needs to be factored into your pricing mechanism. So all costs associated from getting the product or service from wherever you had to purchase it from, the manufacturer to your door, and then in the hands of the actual client needs to be taken in consideration. And time, your time or your employee's time definitely needs to be factored in. So that's what I would say in relation to setting prices. I would say in the service industry, when like people that's on the road, even your fuel, I've seen where people were like, where is the money? And they just never accounted for the fuel for their vans or for their car if they have to deliver. And basically, then that monthly invoice might come from that fuel station. All of a sudden, the profits disappeared, and they never had accounted for that into their price mechanism. So I just highlighted that so that people can really think about all costs associated with delivering the service or product before you can actually set a price. And you cannot just go and do a comparison to people that's doing a similar business.
Yeah, that's very, very important. And understanding the level of service you're trying to provide and the type of clientele that you're trying to market for. that happens, I believe, in our industry as well, where a lot of people tend to be like, oh, well, over here is this much money. Like, well, why is it so expensive here than over there? And it's the value of what you're getting. It's the products that you're using, maybe 3 times more expensive than the products that you would use at a different salon, and vice versa. Spas, whatever it looks like, it's the value and the items that are getting put into the service that is what you pay for.
Okay. All right, so the next, I don't know if you had anything to add, Keitha. If not, we can go to the next
They
question.
summed it all up. They really did. So, yeah.
All right, so the next question we're gonna ask is a 2-part question. One is gonna be, what is the importance of keeping up with record keeping? And the other is, should I include the cost of a bookkeeper or accountant in my cash flow as expenses? Why or why not?
Ray,
Ooh,
you.
yeah, back up to be good first. They're making this the ratio, you know.
We'll give Keitha a chance. We'll let Keitha go. Give you a chance to catch up. Go ahead, Keitha.
So keeping up with record keeping is the first question. It's important because as we've like mentioned, going through just knowing what the business is doing and what the health is like Raquel mentioned, being able to look at her accounts every month and just kind of see where things are, checking her inventory status, checking if salaries are moved or whatever the case is. If those things are not kept up to date or kept a record of, then you really don't know, right? You really don't have a clue what's going on. And as Ray mentioned earlier, it becomes a mystery. So I think keeping up to date with it. If you find that, you know, sometimes there's too much to do at the end of the month, then you do it on a weekly basis or bi-weekly, just so that you don't get behind or too far behind in it. I don't think for any business we should get farther than a month behind in any record keeping that we're doing. It should be done within that month. So when you're doing your bank reconciliations or paying out your salaries for the month or reviewing your inventory, doing an inventory count for the month, that you would have all that information for that month. And then in regards to bookkeeper, yes, definitely include that in cash flow. It's a part of doing business. Having an accountant, someone to manage your account, even if it's the software, it's all a part of doing the business. So when you are doing a business plan or working out, you know, future cash flows, an accountant should be there if you plan to hire someone. An accounting software or product that you're going to use should also be included in that, because again, those are going to be important in the operating of your business, and so they should be included.
Can I piggyback off of that?
Sure.
So so when like an accountant, it's you have to have one. And I think a lot of people are scared when it comes to hiring an accountant because they believe it's expensive. And it depends on what you're trying to get done, right? I believe, and I mean, Ray and Keitha, you can speak on this if I'm out of line, but a lot of accountants, they will do what you want done. They don't necessarily have to do everything for you, right? Like you guys can maybe just do a P&L, or maybe you can just do pieces of the parts that you cannot do. Like maybe data inputting is something you feel comfortable with doing. Maybe if you go on QuickBooks and you can put in your bills or whatever into QuickBooks, and then your accountant could just maybe reconcile at the end of the month. But I don't want people to think that, oh, they think an accountant and they're thinking it's all this money, because they are willing to work with small businesses to be able to give you guys this service. And it's very, very important that you have it. It's even if you start off with them just doing the things you can't do for you, and then maybe they can talk you into what the things you can do to help out to lower the bill for you or whatever it looks like. But that's just the avenue I went down. Like Abacus does my my accounting. It started out where they started doing certain things for me, and then I was inputting things, and I was like, oh my God, this is just so overwhelming. I'm working 5 days behind each chair. I'm doing this. I'm managing 10 people. I have a distributed business. I have 2 kids, and I have no time. So I, you know, ended up trusting her so much. She was just so amazing, Megan and her team, that I let her do everything. And it's funny when you think that you don't have the money. Once you get the accountant, you have money. That's the crazy part about it. That is the absolute crazy part about it. And I can't even sugarcoat that any more than it is. Like, once you get an accountant, you will have money, because they're going to make sure you have money. They're going to keep on top of you. They're going to make sure that if you're overspending on whatever, they're going to tell you, and they're going to keep you in line. And that's that. You need an accountant.
My only comment is going to be, you can't afford not to have an accountant. So I just want everybody in the audience to understand that. I think Raquel hit it right on the head. See, I haven't seen a small business owner that's not an accountant be so passionate about being important of a bookkeeper / accountant. I'm glad this is recorded, because we could turn that into a good commercial. Because it's spot on. It's spot on. You really cannot afford not to have an accountant. And as Raquel pointed out, people think it's expensive, thinking they could try it on their own, and that's normally the biggest pitfall. But as we highlighted, you have to have an understanding of these statements, and there's some of the tasks you can do yourself to keep the accountant's bill at a reasonable level, if you're willing to. And I think she was speaking to the accountants willing to work with whatever the request is. And for the most part, I would definitely agree with that. So that was great. That was a great, passionate appeal to our audience to make sure you have an accountant. So my words is, you can't afford not to have an accountant.
Yeah, it's so true. It's so true.
Yeah, for sure. I just wanted to say a couple quick things. One is, even if you don't hire one right away, put some budget money in your, when you're doing your cash flow forecast, put some money in there for an accountant, so that when you do get one, you've already budgeted for it. I think that would be something that would assist as well. The other thing is, when you're doing your record keeping, I would suggest at least keeping up with it on a monthly basis, and doing that reconciliation. That's going to be important, and then it helps to keep you on track and not fall behind where you have to do 6 months. I mean, I've had some clients where they need some financials because they're getting a loan and they've never done accounts, and so you have to do 3 years and 5 years and things like that. And I would also suggest, if you're not using a software package right away, keep your records, keep your invoices, your receipts right on there. If you withdrew money and it's to pay a staff member, right on there, so that when you're actually doing that record keeping, you have that information in the system. So that all is going to be very important. We do have a couple more questions, and we do want to allow at least 20 or so minutes for question and answer. We do have a bit of questions in the chat, and so we do want to allow some time for that. So we'll ask these 2 last questions. But for the questions that we have answered so far, and we had a couple that we may not be able to get to, but I think it would be important for you guys, along with the FAQ sheet, to put those answers on there, just so that you would have, some information on those as well. So one of the last questions is going to be, what is forecasting and why is it important? And we'll give that one to Raquel.
So forecasting is almost thinking about your business at the end of the year or at a future time. So if it's January is when you do your goals, you want to be prepared and you want to know what everything looks like until December. Like you're going for a budget. Like I have my own goals. Every year I sit down with my business coach and my accountant, and I know what the target and my goal is for 2021. In January, I know my predictions for how much money I need to make in retail, in service, every single month based off of a projection on how the business runs during those months. And at the end, it should be a net profit or net income of X. Sorry, I lost my train of thought. So yeah, it's very important to forecast and just know what the end goal is, what makes your heart sing, you know, what are you looking to get at the end of the rainbow, and knowing it by step, by what it takes, money, whatever it looks like, it should be sort of written down and known, like month by month or week by week, whatever works best for you. I know week by week works best because you can track it more accurately than by month, but as long as you're checking it by month at least, then you know you should be good.
And it's funny you say that, because for you, you may be able to forecast by the year, right? Because you've been around for some time, but I forecast per month, and that goes beyond accounting. Like, I want this much followers by the end of this month, that I want to have this, make this much revenue, and make this much sales. If it's not revenue, it's sales. Like, I do both of them, so I'm not like, okay, if it's not this much money, I want 15 sales or 20 sales, or however it may go. But it's important to keep yourself accountable every single month and try as hard as you can to hit those targets. And that may mean doing a little bit more marketing. And I always say that it takes you to spend some money to make some money. Like,
Yeah.
sometimes I don't want to pay for photo shoots and video shoots, but that's what I have to do to attract customers to make me meet the forecast that I have for myself.
So Keitha or Ray, do you have anything to add?
I would just, well, what Raquel, she came out do that swinging if, you know, you're able to predict what would happen in the future. She had it really spot on. So again, it's just being able to use like historical information. So Raquel kind of knows what months are, you know, super busy based on what holidays are happening, or, you know, people vacationing. So she's able to use that information, you know, with current information, and just kind of predict how she wants the next few months to go, what she should be expecting. She's able to make business decisions based off of that, right? Or strategize. If one month something's like, okay, this is not what I have predicted or expected, it's down, or whatever the case is, she can look at it. She can go and review and say, well, what caused this? And if she needs to make changes for the next month or two, then she's able to kind of implement those little changes to kind of get back on track. So forecasting becomes important when you're able to say, well, this is my expectation. This is not what happened. So why did that not happen? You know, and so it's helping as you go forward to make those business decisions quicker, and you'll get it. Go ahead, Raquel.
And I can attest to that. Like, this year has actually been a real change for me, because, and a perfect example of this is you have your year predicted out for you. You know exactly what you're going to do based off of the people that work for you. Now, I have one girl that is out on maternity now. That just, it happens, right? So now I'm down one hairstylist. Now that cost me X amount of dollars, which I know what that is per month, per week, you know. And then now I also have a front desk receptionist who's pregnant. That is also due at the end of this year. So it's like, you know, you don't anticipate these things to happen. You don't know, but now I know what my chair costs. I know how much it costs me if this person is not here. I know how much this chair costs per month. Okay, how do I then put that money into, maybe got to split her clients amongst other people that are working there to make them more busy? Do I bring somebody else in to fill her space to make that money? You know, it's a lot of different moving parts. Some things are just out of your control, obviously, but just being aware of it is definitely, because it's happening. Stuff happens, you know, COVID. It happens, and you just can't do anything about it, unfortunately.
All right, Ray, did you have anything to add?
Just the forecasting obviously has financial goals, but also has operational goals in it. So if anyone has a seasonal business, forecasting is important, because you know, there's an off season. So in your peak season, you need to be putting some funds aside for when that low season comes. And the forecasting allows you to do that. I think one of the biggest mistakes small businesses make is when things are going great, they don't plan for when things, as Raquel pointed out, things slightly change. So that's what I would add to the whole cash forecasting. It impacts financially and operationally how you can operate your business over the next 12 months.
Okay, we kind of want to wrap it up with there and start with some questions, but we do have Carlos who has joined us, Carlos Francis, who has joined us from YoCherry. And so I just wanted to get him to introduce himself, his business, his background, and then he can just give us a brief overview on, how does he feel about accounting? What does he do for his business? Just high level, how do you use forecasting and things like that for your business? Do you have someone? Do you do it yourself? What's your outlook on accounting for your business?
Can you see me, hear me?
Yes, we hear you, see you.
Okay, yeah, sorry for being late. I'm in Florida. I'm busy. I'm doing a whole lot of stuff here. And when they ask me if I can do it, I know it's going to be busy, but I say I won't be able to make the time, but let me see what I can do. It turned out that this is time I could make. So yeah, sorry for being late. But well, as far as I intended to address a couple other of the earlier questions, right, in terms of how to set prices and all that. But if we're at forecasting now, for me, I do my forecasting based on, I check my numbers daily. For my type of business, I need to be delegating staff. I need to move around my labor weekly, and by seeing where my sales are daily, that give me some insight as to what I should be doing next week. And then know that is going to be, translate into what I do for next month and per quarter. I do a lot of historical, monitoring, to make sure my presumptions were correct, and if they're not, then I do some adjustments and so forth. But forecasting will, to say the least, it's very, very important. I say I'm big on it for the simple reason, in order to be efficient at this, and we have to be as efficient as possible, because that's the only way you can, keep your costs down and and be as productive as possible. Is to be able to know what labor you need at any given time, and just move around those labor. As far as long-term forecasting, I don't do a hell of a lot of that, because yeah, we are seasonal for one thing, but there's a lot of curveballs that get thrown at us quite often. So I tend to be a little more short-term, in my forecasting. Prices shift drastically. The price of my product, my supplies, they shift. So I learned that earlier on. Forecasting is only going to help me within the next 2-3 months. If I try to do too much forecasting beyond that, I'm going to be it's just not going to work. Give an example. Just last year, I bought some containers. I paid $685, for the set of containers. Went back to buy them last month, it was $1,285. So whatever it is I would have forecasted, budgeted for that, it just would not have worked. The what do you call it? The sugar tax, that throws for a loop also. We trade in sugar, and just the other day, the customs keep asking, oh, you got to send us, if we add a new product, we got to send them the labels and all that. We may say, oh, it doesn't fall under the sugar tax. They say, oh, yes, it do. So yeah, I'm a short-term forecaster, because we get a lot of curveballs through at us. I guess you guys have addressed the price setting thing already.
Did you have anything you wanted to add really quickly before we go into some questions?
Yeah, because I think setting price is very important, and of course our business is very price sensitive. We sell a luxury product, and we can't really just change prices on a whim. So we have to put a lot into how we do our prices, and it may or may not apply to other business or other sectors. But I know for us, in order to properly set prices, we have to always make sure we are associating every single cost that's associated with the price of the cost of the product. you know, and make sure that's all factored in. So when we do set a price, you know, we're covering all the known factors that adjust that price, because there's going to be some unknowns, you know, that's going to come, maybe a government regulation or whatever it is, some price increases somewhere on the line. And we have to have some buffer, you know, when we set those prices, you know, in case there's some unexpected inflation, you know, and when they do come, we want to make sure those prices that we set, you know, has enough buffer in place where if we can increase the cost, we can absorb the price without any serious impact, you know. So it goes without saying that the most important thing is make sure you understand all your known costs, you know, whether it be electricity, the cost of your shipping, just everything. Factor those in and then allow yourself some buffer. That said, there's also going to be the industry norm for your product, you know, what the customer can bear. You can't just set your price because these are your costs. If your cost is not in line with, you know, what you can sell at a profit based on the industry norm, then maybe you should not be selling that product, you know, or your cost is just too high. So you got to find ways to reduce that cost, you know. So you have to set the price, you know, anticipating, you know, whatever inflation you can think of, and you still won't be able to, you know, fully anticipate, you know, everything that may come at it. So you do need some buffer, you know, and be as close as to the maximum that the consumer will bear, you know, because you won't be able to change those prices, at least not for us, because like I said, we sell a luxury item. You know, anyone can go to the supermarket, buy some ice cream for like, I don't know, $5 something, you know, and it's like $5 something for a small cup of ours. So we have to be very realistic, and, you know, as to how we set prices and how we can increase prices, because we just really can't, you know, given the current situations.
Okay, great.
Yeah.
Thanks for your insight. So we're going to, oh, someone sent, we're going to see if there are any questions so that we can get to those. And any questions that we don't get to, we will definitely make sure that we do answer them through email. We do have everyone's email address that has signed up. So we will go through the questions and make sure that they are all answered, along with the FAQ sheet as well.
Okay, so the first question is, what are good free resources that can help manage the books? For example, chart of accounts, income, balance, and cash flow. Anybody has anything to throw out for that question?
You said free resources that could help?
Yes.
I would say Google some templates, to be honest. There are templates that people create and put online all the time, and you might be able to find one that already kind of has like formulas like in it. You just drop your numbers in certain spots and it will calculate things for you. But that's a simplistic way, right? It depends on what size of your business and what your business entails and all the other good stuff. But just doing those basic things, I think you can probably find a good template online. It's probably gonna take a little time, trial and error, to find one that works best for you, but that's a free resource. Yeah.
Could you run the question real quick again?
So while she's getting the question to answer, I know they do have some software packages like Wave. They also have FreshBooks, which I think does invoices and things like that. There are, like Keitha said, there are some software out there that you can use that are free. I would just say be mindful, you get what you pay for. So if you're not paying anything, how in depth, depending on what you want for your business, how in depth, what they're going to give you back. There are other software that are paid software, such as QuickBooks. We do use that in-house at BEDC and Teacher Course, which Ondreyah will go more in depth when we do our closeout. But that would just give you more high level, of accounting software packages. So it just depends on what you need it for. There are things out there, ones that we know of, a Wave, a FreshBook, but there are paid resources such as QuickBooks. Ray, do you know of any others?
No. To your comment, free isn't always the way for a successful business. To be in business, I think Ondreyah highlighted, you have to pay a little bit to be in business to be successful. I think the examples you gave of the free packages is all the ones I'm aware of. But there are some what I would call low cost, reliable software like QuickBooks. If you got a desktop version, between 300, 450 one-time purchase, that's, to me, that's peanuts for an investment in a successful business. And there are other similar software packages in that price range. I wouldn't necessarily go out and get one of those enterprise accounting systems if you're just starting out. And I mean, maybe that's where the question's coming from in the early research. If you go in that arena, yes, it can be quite pricey, but there are some reasonably priced software packages like QuickBooks, so that you can do for a couple of $100, and you'll be up and running, being able to do all the things we spoke about today so far on the webinar. Now I do have to interject, co-host. I have to jump off because, as you know, my calendar is very tight. And I'm got to be somewhere in the next 5 to 10 minutes. I just want to say thank you for having me on the webinar. And if there's any questions that come out directed towards me, you could forward it to me and I could get them back to you guys. I'm wishing everybody a great and wonderful afternoon.
Thank you, Ray, and thank you for accepting your panelists. Have a great day.
Thanks.
So the next question is there a learned formula which could or should be implemented within your spreadsheet when seeking to ensure the pricing of goods and services for customers? I don't think that there is, because everybody's business is different, so it wouldn't be right to have one standard sheet to do this. As Raquel mentioned earlier, it all depends on your business. So if I'm a seamstress, I need to think about the fabric, the thread, the needles, everything that it takes to bring that to life. I have to think about this cost. So it all depends on the costs that are reflected with you bringing your product or service from conception to reality. So that's something that you have to think about. As just mentioned, you have to create a buffer in case something changes, and you don't want to say, okay, well, what used to be $3 today now is $4 because something happened. You want to be able to have steady prices unless it's something extreme, and you don't want to keep taking your prices up every month, or so as mentioned before, you want to try to be as realistic as possible, including all costs to bring the product or service, and also take into account what you have to pay yourself out of that. All entrepreneurs have full government obligations. If you don't know, payroll tax, social insurance, health insurance, private pension. So all those types of things also need to be built into your prices to make sure that at the end of the month, you are paying the government your money that is due for operating business in Bermuda. I won't touch too much on that, but I'm just saying that needs to be accounted for in your cash flow. So that's the answer to that question, to be brief.
I actually, in the QuickBooks course that we teach, we do have a section that goes through cost pricing. And so there is a formula that you can use, but like Ondreyah said, every business is going to be different. So what you put into that formula, how many items go in there, will vary, and you can expand it to how many you need. But we do have a formula that we use, so we can share that with you guys as well.
Are you aware if any of the US-based payment apps that offer immediate electronic payments between parties are available and able? The answer to that, so sorry, is just no. We don't even have to do that.
Yeah, we have Authorized.net is one of the most popular payment gateways here, and not all of the third-party apps actually use Authorized.net, right? So unfortunately, we just haven't got that far yet. It's our bank's system. It's something that they need to do on their part to be able to have those types of apps be used in Bermuda. And I don't think we're close to that, but no, is the answer.
I think I heard PayPal can be used in Bermuda though. I
You
don't
have
know
to
what-
attach it to a
That's what-
personal card, maybe a personal card, because I have my personal card attached, but it's actually synced to my Bank of America account, which is overseas. I've looked into it for business use and business cards, but they ask you for like a tax number, tax ID number. There's different requirements that they ask if you're looking for it for business use. And so it won't work if businesses are like that. Now, if you'd, like I said, if you're doing for a personal card, maybe, but that's a credit card attached to as opposed to my actual Bermuda bank account.
So it's not to say that you cannot use PayPal. You can, you just won't ever be able to get the physical cash from it. You would have to use it to go and pay back a vendor or purchase something else, but you won't ever be able to have that cash to use for whatever
Like
you
going
need.
into your bank account. It won't.
That's really, besides the authorized on net, obviously.
Yeah. Try to take one more and that's it. At what level of development within your business model should a small business seek professional assistance, considering the fact as a new startup likely has very limited operational budget? For me personally, like I told you, I use my cash flow for now, right? But I have hopes in 6 months that I'm gonna move that same information that I implement into my cash flow and my bank statements and transfer that over to an accountant to then formalize it, because you mentioned as a startup, an accountant is probably the farthest thing from your mind in regards to paying, but it's the most important thing that you're going to need. So I wouldn't advise you trotting along too long without an accountant, because we tend to forget, and then forgetting just makes it all more work to catch up to bring your accounts up to date. But I'm not sure if anybody else has anything to throw into that.
I would just add that BEDC is also a resource to assist. You can meet with officers there. They can kind of guide you along the way. BEDC also has templates on the website for business plans, for cash flows and the like. So if you schedule an appointment with one of the officers, they're able to direct you or guide you in the right way. And that might be something that can get you started if you're an early starter, and they can kind of help. They can even recommend service providers. If you're at a point where you're like, I want an account or something else, they can recommend that as well. So I would say that you utilize BEDC services that they currently have, especially in that stage.
Okay, so the rest of the questions that did not get answered, we will just answer them privately once the session is over. But I want to say thank you to everybody for coming out today and taking your hour and a half to spend it with us to learn about accounting and just the basics. I know we didn't walk out as accountants, but I'm sure we have a basic general overview of things that are important and that we need to keep in mind. Also, BEDC has a QuickBooks course that can be very beneficial to anyone that may be interested. That starts on September the 8th and it runs for 6 weeks. And you have the ability to do the course and get the software for $315, or you can just do the course and not take the software for $190.
It's 8 weeks as well.
I thought I said that.
No, you said 6.
Oh, 8, sorry, 2 extra. Also, we have a microloan program in the event that you're seeking funds to start or expand a business that goes up to $30,000. We also have a loan guarantee program, which we facilitate in relations with the banks, where we can act as a guarantor of up to 75%. In order to get any access to any of this, that information, well, not the information, but the application, you would have to become a member on our website. And once you are a BEDC member, you will have the access to apply for any BEDC products or services through that, through the register. As Keitha mentioned, we have a service providers list. So if you are looking for an accountant that has been vetted by BEDC, we do have a list that has accountants on there, as well as if anybody on the call is an accountant and is interested in becoming a service provider, you would just have to send an email with your interest and resume, and then you'll be contacted for an interview to be considered to become a service provider. As previously mentioned, we tend to just focus on our own craft. So if you're a baker, you focus on baking. If you're a seamstress, you focus on sewing. And so these things as accountants and marketers and all that stuff gets lost, outsourced. Or maybe your auntie, uncle, cousin, brother, sister is an accountant, someone that you can barter services with. you know, it doesn't always have to be expensive. You may just know someone that you can work with to be able to still provide you accounting services, but it's not as expensive as we all think that they may be. I don't want us to look at the expense of an accountant, but more so think of the longevity of your business and the long-term value. So invest in yourself and invest in your business so that you can make sure that you are running a successful business, because sometimes that's the case when it comes to a business shutting down. It's just sometimes because of poor financial decisions. I did find a quote, and it says, in closing, it says, the word accounting comes from the word accountability. If you're going to be rich, you need to be accountable for your money. So I want to thank you guys for joining our session. Also, one last thing. So the 4 winners for the prizes, which was 2 $25 gift certificates from Blueprint and 2 $25 gift certificates from YoCherry. So we have Norman and Dallas, who won the $25 gift certificates to YoCherry. And we have Michelle, and I want to say it was Diana. Where is it? Michelle and Diana that won the gift certificates to Blueprint. So once again, enjoy your weekend, everybody, and thank you for joining us today. And thank you, panelists, for joining us and sharing your wealth of knowledge with our listeners.
You are so welcome. Thank you for having me.
Okay, thanks for having me.
You're
Thank you,
welcome.
guys.
guys.
All right.
Bye, everybody.
See you later.